Hello, and thank you for tuning in again. My name is Robin Wouters from TechW and the EIC Scaling Club, and I'm joined here this morning by Jacqueline van den Ende from Carbon Equity. Jacqueline, welcome.
Thank you. Thank you for having me.
What is carbon equity?
Carbon Equity is a climate fund investing platform, and our mission is to unlock private capital at a scale of billions of dollars to help fund solutions to climate change, technology solutions. And we do that by democratizing access to the world's best climate, venture capital, growth, buyout, and infrastructure funds. So
All right.
that's what we do in a nutshell.
That's the elevator pitch. We're going to dive a bit deeper, of course. But do you consider yourself more a fintech company catering to funds? Are you a fund? Are you a fund of funds? All of the above? How should I
Carbon
see this?
Equity, yeah, it's a good point. It is a fintech company. You could describe us probably best as a digital first asset manager. And we fit best into the category of digital platforms that are democratizing access to private equity, which includes Moonfair, Titan Bay, iCapital. But we are both in the sense that we have a digital fintech platform where we make it easy to invest in private equity. But we also technically are an asset manager in the sense that we do fund selection. So our main product are climate fund of funds. So we select the funds in that sense. We're a asset manager, so therefore a digital first asset manager.
Gotcha. Okay. Is there anything like this in the world, or is it unique?
So the democratizing access to venture capital or private equity is not in itself unique. Carbon Equity is the only one who is fully specialized in the climate theme. So in that sense, it is unique. So there is no other digital climate VC growth buyout or infra fund of funds that we know of.
Great, fantastic. Where did you get this idea? Because I know you used to work as an entrepreneur, also in Southeast Asia. Then you were on the investment side as a partner at Peak Capital. Where did this idea for carbon equity come from?
Indeed, I have sort of been both on the investment side. I started my career in private equity. I've been a partner at Peak, which is a Dutch and German fund. And I spent the other half of my career building companies, amongst others for Rocket Internet, as you mentioned, in Southeast Asia. I'm building a fintech company there. In 2019, I read the book The Sixth Extinction, which talks about the 5 major extinction events in the history of the planet. And how we're now right in the middle of the sixth extinction and how this is going much more exponentially faster than prior extinction events. And that for me was a massive wake-up call of like nothing else matters other than helping solve climate change. And because I have a background in private equity, venture capital, fintech, I believe in the power of capital. Ultimately, money decides outcomes in the world. And therefore, I decided to leverage capital as my weapon of choice to fight climate change. And the observation that we had then was trillions of dollars were moving into ESG stocks. But trading ESG stocks is primarily moving money. There's very limited impact in the real world economy. If you buy a share of Tesla, Tesla is not going to produce an extra car. But if you put capital into private companies, there's a very direct relationship between capital invested and capital available for growth, innovation, etc. So capital can have much more impact in the private markets and in the listed markets, but a very small share of the capital in the world has access to private markets. So if you look at the whole wealth stack, we focus on what we call mass affluent and high net worth individuals. People with a net worth between 100,000 euros and 10 million. There's 177 trillion in net worth globally sitting with this group with less than 1% exposure to private markets. So what Carbon Equity is looking to do is sort of open the door, make it possible for that segment of capital to invest in private markets, as a result of which we can literally move billions of capital from stagnant bank accounts or from listed stocks into private markets where it can help solve real world challenges. And at the same time, make it possible for thousands, if not millions of people down the line to also benefit from the upside of investing in these impactful but also value creating solutions.
Great. That's a fantastic pitch. Do you when you got this wake up call in 2019? That was pre-COVID, pre-Ukraine energy crisis, global
Yeah.
market turmoil, and all of that. Are you still as convinced as you were back in 2019?
Yeah, super. I mean, one of the cool things about building a climate company or investing in climate technology is this problem is not going to go away. Or maybe that's not a good thing, but for the foreseeable future, for the coming decades, this is going to be the most dominant challenge we're facing as humanity, and the urgency of it will grow by the year. So, like, it is such a massive macro trend that it makes so much sense to do something in this space. And we're really at the tip of the iceberg of capital flowing into the climate space. And often when we talk about climate or climate technology, people are a little bit inclined to think about this as a niche of like, oh, hot climate tech, or it's direct air capture, or it is cell-based meat. And yes, it is those things. But this is nothing less than the fourth industrial revolution. We need to transform literally the entire foundation of our wealth and economy from fossil intensive to fossil free in a record amount of time. So the amount of capital that is needed to transform technology and infrastructure is massive. So I think it's a huge long term mega trend, and so I'm no less convinced than I was when I sort of conceptualized this in 2019.
Great to hear. You already mentioned climate tech encompasses quite a lot. There's renewable energy, there's smart mobility, there's food production, supply chain, and whatnot. What gets you the most excited? Where do you think you can make the most impact in the least amount of time?
The most impact in the least amount of time is still in the relatively basic stuff. So that's really electrification, grid storage. So battery storage is very interesting because it is a relatively mature technology. So think of companies such as Farm Energy, which is one of the 8 unicorns in our portfolio now. What they do is it's called iron air battery storage. And they run electrical current through an iron battery. And when the current runs through the battery derusts. And when there's no current, it rusts. And so you have this reversible rusting process. You can save up to 100 hours of electricity at 10% of the cost of lithium ion batteries. Yeah, these types of technologies are ready for rollout and can have a massive impact on creating more grid resilience. So we no longer need natural gas, for example, when the sun doesn't shine or the wind doesn't blow. So these types of not necessarily low-tech technology solutions, but mature technology that are ready for large-scale deployment will have the biggest near-term impact. And then on the flip side, there are technologies that are still very immature. Think about indeed direct air capture or nuclear fusion, which could be a total game changer, especially for industrial heat and industrial power, but still are probably at least 10, 20 years away from that rollout. And that's exactly what Carbon Equity enables, because through Carbon Equity invest in a portfolio of 150 up to 200 different companies. You're investing both in those early stage, hyper breakthrough type of massive impact, but also still quite far out type of technologies, but also in stuff that is ready to scale. Electrolyzers are going to have a massive impact on our ability to produce green hydrogen. Batteries, electrification, grid resilience, demand response. All of these technologies are ready to scale with limited technology risk and will have, in my opinion, the biggest impact towards our 2030 goals.
Right. Now, when individuals or companies, for that matter, invest in carbon equity or through carbon equity into climate tech solutions and funds, is there an upside there? Do they expect their money back? Do they expect a return, or is it mostly philanthropic?
No, it's really we target market-based returns. So for a investment in our climate tech venture capital growth and buyout fund of funds, that would be a 2 to 2.5 times net money multiple, meaning over the duration of the fund, that's you get 2 to 2.5 times your money back, which comes down to a net IRR, which is investment speak for internal rate of return of 10 to 15% net IRR. Our climate infrastructure fund of funds has a 10 to 12% net IRR target, but it's asset backed. So it's a safer asset class because you're investing in asset backed and more mature technologies. So in that sense, it's fully competitive with what you would expect from investing, let's say, in a SaaS fund of funds or like a Moonfair alternatives, for example.
Right. Okay. And what about geographically? Where do your customers come from?
The majority is from Western Europe, so Netherlands, Belgium, and Germany. So we raised 200 million over the past 2.5 years, more or less, 800 plus investors now. And we obviously have our home base in the Netherlands. We have our second office in Berlin. We raised 50 million euros from the German ecosystem over the last 12 months, more or less. And Germany will really be our focus for internationalization. So we're also hiring a local team there. And then Belgium and the Nordics. But we have investors as far as in Singapore, Brazil, I think 1 or 2 from the Middle East. But yeah, primarily still Europe based.
Great. And what is your main challenge today? What keeps you up?
As every company, the main question is how do we scale demand yet faster? I think the adoption, the ability to raise 200 million over the past 2 years, which has been a difficult fundraising environment, has surprised us in a good way. It's been easier than we thought, and we raised not only from private individuals, also from family offices, foundations. So we also had some bigger check sizes. So it's been easier than we expected, and yet as an entrepreneur, I'm always impatient. Like I'm on the road to 1 billion. So how do we move faster? And for a product like ours, the investment minimum in the German market for professional investors is 50,000 euros, for non-professional 100 or 200. So it's quite a big amount. And the question is, how do you build sufficient trust with people that they're willing to invest that kind of money? And so we really make active use of, for example, famous entrepreneurs who are brand ambassadors to build trust and leverage the name and the reputation of the underlying funds to build trust. But I think, how do you scale trust? How do you reach more people? How do you educate people on what venture capital private equity is and why you would do a fund of funds instead of, for example, an angel investment? Yeah, that is the question is how do we move yet faster?
Yeah, that makes a lot of sense. You mentioned leveraging the names of the funds. You said earlier you're quite selective in which climate tech funds you work with or you invest in. How do you make that selection? How do you find them? How do you rate them? How do you vet them? What's the
Yeah.
process there?
Yeah, so we have a team of 8 people. Some people who really come from an institutional fund investing background, from Alpinvest, which is the indirect arm of Carlyle. They have 65 billion assets under management. So they're extremely well trained in the fund diligence part. Then we have people who come from the climate technology side, such as Lisa, our chief climate impact. She came from McKinsey and is really specialized in climate and energy transition. So the fund has a 4-step process where, first of all, we make sure that we track all funds globally. We track approximately 1,000 climate VC growth and buyout and infrastructure funds across Europe and the United States. Then the first step in our actual investment process is what we call climate diligence. And in this climate diligence process, it has 2 parts. In the first part, we look at what is the intention of the fund? What's the climate goal or climate intention of the fund? And how do they execute upon that intention? So we look at their investment process. How do they set thresholds for how much climate impact is enough? For example, some companies will say a company needs to have a emission reduction potential of at least 1 gigaton or a half a gigaton. Then we look at how do they do their forecasting. We look at how do they ultimately make their investment decision? How does impact factor in? And then do they tie their incentives, such as carry incentives, to their ability to realize that impact or not? So we look at processes, governance, reporting, basically at the quality of their institutional processes to make sure that they actually meet that impact. The second thing that we do is what we call an impact diligence, or where we look at the entire historical portfolio of companies that they invested in, and we assess to what extent these companies are critical net zero technologies. And critical net zero technologies is a mapping of all of the technologies that we need to be Paris aligned. So we make sure to see, or we analyze to what extent their portfolio is aligned with this critical net zero technologies framework and whether that's good enough. Only if we are convinced on the climate side and we score funds on a scale of 1 to 5, where 5 is global best practice and 3 is good enough, the fund needs to pass the bar of 3 to proceed in the process. And then the second step is financial diligence, where we also assess historical financial track record, the track record of the individual GPs. We will look at the key risks, how the risks are mitigated, etc. And then it goes to our investment committee. The investment committee has internal and external members who are experts. And then with unanimous approval, it gets approved or not. And then we typically commit 10 to 20 million euros to the underlying funds.
Well, thank you for explaining the process so clearly. Quite a bit of typical due diligence, but also quite specific to climate. So that's very interesting to hear. Now, I live and work in Brussels. You can imagine that a lot of the conversations here are around climate, net zero. How do we accelerate that transition? Do you keep track of what the EU is doing, and also to maybe more specifically what the EIC is doing on that front?
Yeah. Yes, we do. We're not experts we're not experts on the policy environment, but it is important because it factors into climate change. So, for example, the Inflation Reduction Act or the European Green Deal, sort of the support systems of governments and the grants and subsidies and tax breaks, etc., that follow from this have quite a lot of impact on the attractiveness of climate technology deals, especially things that are capital intensive. So it's very important to keep an eye on it. We don't necessarily have representation or lobbying voice in Brussels, but we make sure to keep track of it. One, what is basically the financial support offered by Europe and the US for climate technologies. And the other part of it is obviously the whole regulatory part, SFDR, and all of the compliance requirements that are relevant to us as carbon equity and that are relevant to our underlying funds.
Yeah, makes sense. And what about the EIC, the European Innovation Council? Is that on your radar at all?
Not on my personal radar. Hopefully, or probably it is on the radar of Lisa Rubenstein, who is our Chief Climate Impact, but not for me personally.
Great. Well, let's fix that down the line. But Jacqueline, I really want to thank you for explaining the process behind carbon equity so clearly. I think it's a fascinating way to go about, fixing the climate with capital. I think that's a more down-to-earth approach than some of the activism I've seen lately. So kudos to you.
Yeah. Well, everything has its place. I think there's a place for activism, and there's place for investing, and there's place for policy, and we're at a point where we need everything all at once. So it's part of the solution set. I'm also not naive in the sense that I think that capital or technology will save the planet, but it is an important part of the puzzle where we need to scale as fast as we can in building green tech alternatives to our fossil economy.
Great. Well, congratulations for your achievements to date, and I wish you all the best for the future of carbon equity. Thank you, Jacqueline.
Thank you.